Welcome to Alan Berry Reports TV. I'm your host, Alan Berry Labucan from alanberryreports.com. Today we have a special show. We're going to be talking about fear and loathing that's going on in the stock markets right now that are creating some very good opportunities for investors to profit from these highly emotional times that are affecting the stock market. I think what we'll start out with is we'll talk about some of the fear that's going on right now. And, I've been seeing this since the summertime that there's a very high level of fear. Even though I think that the fundamentals that underpin the value that a stock has in a general sense are very cheap right now. And I mean that whether you're talking about small companies all the way to the largest companies on the Dow Jones Industrial Average. But why are they not performing better? And I think that why they're not performing better has a lot to do with emotions more than fundamental reality. What fundamentally moves a market for a stock is, what's happening with that company. Are they in the industry that they're in? Are they growing? Do they have a good position? Do they have something that's quite unique that could be very profitable for the company down the road? These key fundamental issues are the most important when it comes to looking at stocks. And in a general sense, as I said earlier, I think that there's a lot of companies right now that are not trading at realistic valuations. So, and fear is a key reason why that's happening. Now, you look at what's going on with the global economy, and I'm also very aware that we're in a time during the year when big corrections can happen in the stock markets. October has seen some of the most severe, well, pretty much all the severe negative markets, and I think that time of the year is why people are, maybe their fear level is higher than normal. Also, with all the shenanigans that are going on with politicians in Washington and throughout the world, that's another cause for fear that investors have. Economists coming out with various different solutions to the problems and reasons why, and unfortunately, I think there's a trend amongst politicians and economists that feel like in order for them to make their arguments be paid more attention to and looked at realistically, they think that they have to create fear amongst people out there in order to emphasize how important their solution is. And this high level of fear is playing out in the stock market, and that's why we're seeing fundamentally a lot of companies are worth a lot more than what they're trading at, but they're not trading at those more valuable prices because the high level of fear. Now, I think that we're getting into a period, we've seen the market sort of go sideways for the general stocks over the last month, 2 months. And I think that sideways sort of action where you see some ups, downs, ups, downs, ups, downs, I think that that's getting near an end. I will feel more comfortable about that when we get through October. I still think that there's a lot of emotional trading that can happen in October, but I think once we get out of October, we're going to see a much more bullish market going into the end of the year, and a lot of these stocks that are trading at bargains will be trading at better prices going into the end of the year. Now, that's sort of where we're sitting right now in the fear situation. Now, also, I think that it goes beyond fearful. I think that there's loathing is going on, and we can see that right now with what's happening with the Occupy Wall Street protests that are going on in New York. Now it's also starting to spill out into other parts of the United States and also the world, actually. And this sort of uprising is being focused on Wall Street. And to me, I think that if you just focus on all companies on Wall Street, you kind of miss the point of some of the key reasons to be angry towards Wall Street. And the specific area I think that is the problem is the Wall Street bankers. These Wall Street bankers wound up their debt levels or their leverage to insane levels prior to 2008, and they were all making a one-way bet on the real estate market, and then when that bubble burst, the bankers almost their unwinding of leverage almost created the worst economic condition that has been around in decades. And so I understand why these people are there. Well, to a degree, I understand why. I see a lot of sort of people that aren't really understanding why they're so angry. They're just angry. They're angry because they don't have jobs. They're angry because they have student loans that they can't pay. They're angry because they don't like the look of the prospects ahead. I think that for me, if I was out there, it would be more about being angry at the bankers that created this situation. But just being angry is not the point. I think that why I think that there should be the bankers should have their feet held to the fire is because the key things that caused them to be able to do what they did are still in place. The changes to the rules and regulations haven't done anything really about separating central or commercial banking from investment banking, and I think that the repeal of the Glass-Steagall Act that separated investment banking and commercial banking after the Great Depression did very well at keeping bankers in check for 70 years. And it didn't take long after the repeal of the Glass-Steagall Act that the bankers wound their leverage up, got out of control, and we're now seeing the ramifications of those situations. And even though the bankers have paid back the money that they got from the bailouts, they certainly affected much more widespread costs, and they aren't really doing anything about the costs. And so I think it's important to that the investment bankers and commercial bankers are separated, but even more importantly, the leverage. I think that bankers need to be strictly restricted on how high they can get their leverage up to. If they're allowed to all make a one-way bet and get extremely leveraged again, it will create another situation like we saw in 2008. And that's what I would be protesting against. I don't want to see that happen again. It was much too violent, much too costly, and I think that the protesters, that should be a main focus. But nonetheless, there's a high level of fear and anger, or loathing, if you want to call it, towards the stock market and stocks. And I really think that that level of anger is creating some opportunities. I think it has to do with why stocks are being priced the way they are. But it kind of saddens me, because I think that there's a lot of great opportunities out there for the average investor. And let's face it, my Allen Berry reports have always been mainly about helping out the average investor. And I think that the fear and loathing is creating opportunities, and it's also making people miss a chance to really sort of help out their portfolios and their long-term retirement plans and situations like that. It saddens me to see people losing that opportunity. And so, that's sort of the context of why I put together today's show. But I want to really emphasize more about something that I've been doing lately. Is I've been doing a lot of homework. I started out about a little while ago. I started out a private members only newsletter where I am picking companies, but I'm charging people to be members of that. I do a lot of work online, writing and doing these shows for free, but also have to pay some bills. These things are not cheap, and so I started doing a members only sort of reports. And so lately I've been doing a lot of homework into picks for those companies. And it doesn't matter whether I'm talking about commodities, commodity-related stocks, technology stocks, industrial stocks in general. I am seeing a lot of fundamentally cheap stocks out there. And when that happens, even though there's all this fear and loathing and people are really concerned, it's a time to get bullish. It's a time to, look to where you can find above average performance, because when it gets widespread like that, and that's the case whether it's widespread bullishness, you would then want to be looking at reasons to be short the market, or widespread negativity there's valuations that are really cheap. When that is widespread, then you want to look at reasons to be bullish. And right now I'm not seeing a lot of bullishness, and because there is such a high level of fear and loathing in the market, I don't think that we're going to go into one of those situations where we turn around quickly and all of a sudden the stock market gets much more bullish. I think that what you're going to see is fits and starts. I think you'll see more bullishness come into the market, followed by some bearishness, followed by some bullishness. But I think that the trend will be where the bullishness overpowers, if you will, the bearishness. And so that's why I see a trend. I don't see a trend where I think stock prices are going to go like this. I see a trend where I think that we're going to see, stocks moving up nicely and really rewarding those that take advantage of these current high emotional times in the markets. And so that's what I wanted to talk about today. And I think that there's some really great opportunities out there for the average investor to sort of, look to getting strong performance in the future as the markets and the economy start to gain strength. And I'm seeing that there are lots of reasons to be more bullish, and more reasons to believe that the economy has turned a corner and is headed towards a better situation. So that's a wrap on today's show. Before closing, I always stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own homework and speak with your financial advisors before making any investment decisions. I always also like to mention there's some those that are important to us being able to do these shows. One of those is YouTube. We use YouTube as our primary website to produce and broadcast these shows, and they have a great website for anybody interested in doing online shows, so we highly recommend them. Also, if you're watching this show on our website, if you look to the left and right of me, you'll notice that we have banners. Those banner sponsors are important in us being able to do the work that we do. If you want to do some homework on those companies, you just click on their banners, and they're directly linked to the company's website where they have tons of information. And obviously, to you, the viewers, you make this show worth doing, and I really appreciate you tuning in. So thank you very much for tuning in and watching the shows. We're always trying to grow our audience, and that's, even though we don't charge anyone to do for these shows, if you want to help us out, it's really helpful if you send out emails to your friends on how to find our shows and talk about our shows, or any other way that you get a hold of your friends that follow the markets, and let them know about our website, our reports, and our shows, and we'd greatly appreciate that. So also, if you're not already a subscriber to our updates, we don't charge for updates. Look on the website at the subscribe section, fill out the information, and we'll keep you updated at no charge of all the work that we're doing. So on that note, that's a wrap. Thank you very much for joining us. Again, we look forward to seeing you soon, and have a great day.